Welcome back to another Tips for Mortgages video series. Mike Parkinson, mortgage broker with Dominion Lending Centers in British Columbia, joined by my cousin, Jaden Bax with Avenue Financial out of Crossville, Alberta. Jaden, how are you today?
I'm cold. It's we thought that this warm weather in November was going to last forever, but it's snowy and blowy and all the beautiful stuff over in Crossfield today. How about you, buddy?
Well, it's sunny, and we had quite a bit of frost this morning. But it's a beautiful day, so we'll take it over the rain. We've had a lot of rain lately, and I'd rather have the cooler, sunny weather, kind of like what you guys have. So less all the snow.
The snow, not too bad for snow, but there's a lot of stuff to touch on today. We were talking about before what exactly are we going to talk about, kind of trying to hit all of our points. There's a lot of points today, Mike.
My God, yeah. So let's start with interest rates. Are they done, Jay? Are we done with Are we at the peak? Is there going to be any more rate hikes that could happen? Where's the data coming in? What are your thoughts on that?
Yeah, we're definitely at the peak. Let's split that off, and we talk about this on a weekly basis. But maybe some people don't know. There's two different rates we talk about. We talk about fixed and variable. We've seen what is happening to bond yields, which is what the basis of fixed rates are, in the last 2.5, 3 weeks kind of thing. It's been a huge fall, right? We're looking at over a 1% dip in the last I'd say about two weeks, just about a 1.25% down from what it was at its high there. And the interesting thing about that is we're seeing about a 15 bips, so a 0.15% pullback from the lenders so far. So we believe that bond market is going to keep doing that and kind of keep pulling back until we get more into that 2.5 or 3.5% range that we would consider normal post 2008. But the lenders here don't want to believe it yet, eh?
No, and it's funny seeing we've decreased our rates again, and it's on the longer term, like the 3, 4, 5 year fix kind of thing. I haven't seen the shorter term rates drop at all yet, which the short term bond yields are still up, right? So we'll see what that happens. But actually, more and more people have become interested in the variable as of late. I'm not sure what you're seeing on your end, or if something you're talking to your clients about.
Yeah, I would say the last 6 weeks I'm about 80% variable for my clients. They see what I see. I see. I think just about everybody out there now is recognizing that 2024 we're going to start seeing prime go down. The overnight rate, which is dictated by the Bank of Canada, is going to start pulling down. It's a matter of when. I see a lot of people talking about summer, fall. I think you and I, when we look at the economists we follow, the data that is out there, knowing what renewals are coming up, the amount of renewals coming up in 2024, and how that will will impact inflation when people have to lock into a higher rate. I'm thinking spring. I think we start to see some relief in spring.
I agree.
And I think we're going to be way more aggressive than people are talking about as well. I think we're going to see a relatively healthy drop over 2024 heading into 2025, which will get us back into that kind of, somewhere between 2.5% to 3.5% range, like I said, which is normal post 2008.
Yeah, and these are just, there's no guarantees, no crystal ball, but this is what's happening, the reality, what happens with the business cycle, right? Things go up, things come back. We don't know how far they're going to come back, but they tend to come back quite far, especially in a world with this much debt. Our world revolves around debt and cheap debt, right? So where it is right now, it's a lag effect. We talked about this for the last year and a half. Here we are again. It's a lag effect. It's really coming into its own now, and it's going to start hitting harder. Unemployment is starting to creep up. And I think it's going to eventually take off quite drastically. And I think that's going to be the crisis that happens, where they're going to be like, oh my God, so too many people are out of work and things are getting really slow here. And it's going to be a world event, right? It's not just the Western world. And we're trying to save us, right? So.
Yeah. And it's really interesting though, that one of the things that employers are having problems with now is people aren't quitting like they were quitting, right? like a couple of years ago, people just quit and go find another job, and away they went. And that was sometimes good for companies. They didn't have to make those decisions. We're getting to the point where a lot of the government money is running out. Some of those government loans are getting called in the next short little while here. Um, these businesses are going to have to make these decisions whether they want to or not. And so that's going to push unemployment a little bit higher. I think one of the things we talk about as well, immigration numbers in Canada are really poorly counted.
Right.
We very likely have close to 1.5 million more people in Canada in the workplace than are actually counted. So that's people on non-permanent residents who are on work permits, students that have the ability to work as well. So I think even the unemployment numbers as they creep up, they're quite a bit higher than what is actually being shown right now. That's
Yeah,
back
and
back to
honestly,
you.
the numbers. Well, honestly, the numbers that they're seeing, like, you can't go by those, like the jobs numbers that they come out with, and a lot of it's guesstimated, right? So if you look at the household survey, that's quite drastically different than the numbers that come out, say the JOLTS report in the U.S. I was listening to David Rosenberg, and he said if you look at the household survey, which is the true measure of what's happening with jobs, there was minus 300 and something thousand jobs lost instead of 180,000 gained or whatever. So he said it's quite drastic, and he said they're revising that number by the month as well, right? So it seems to be coming down all the time. And talking about the GDP, that the growth that came in, it was way higher than what
Yeah.
people expect, right? There's no way that's happening. There's still a lot of government spending. A lot of those jobs are government jobs. The participation rate is still down pretty low, which means there's still a lot of people out of work, right? That aren't even looking for work. So yeah, and like you said, and boots to ground. Like, I don't know if you're hearing any of this or seeing any of this, Jay. I've talked to a few people lately that have lost their jobs around here, and it was very surprising because they were extremely busy for the last few years. And
Yeah, absolutely. And I've seen people in the banking industry that have 20-year veterans. It's funny, they're getting, and we're seeing this across banking, and you hear about the layoffs with Scotia and RBC and things like that. It's they're getting rid of some of those more senior positions that make more, right? And so that's all part of their bottom line, that they have to, if you're getting rid of those senior guys, maybe over the medium term you're saving money, but there's still a cost to getting rid of those guys, right? In the short term, in terms of buyout packages and things like that. So really, banks in Canada are super interesting right now, in that way. Like, how are they going to make up some of that money going forward? The government is trying to restrict some of the charges they have on some of their accounts and things like that. Does that lead to larger spreads in mortgages? Who knows, right? Like, there's a lot of interesting stuff happening in Canadian banking right now. Hey, Mike?
yeah, and well, definitely, and I mean, we're going to see that moving forward. Like, they're on a thin line, right? Just like all the banks worldwide, I believe, are. And as these rates stay higher, it's going to be a lot harder for them, moving forward. So I think, like, I'm in your camp, Jay. Rates are coming down. Definitely, everybody's predicting it at some point next year. We just don't know when. I think it's going to be more the springtime-ish, before summer. And the views are changing on that as the data comes in and things get weaker and weaker. And I think the fourth quarter here is going to really tell where the first part of next year is going to start. Let's talk a little bit about housing. Just an interesting conversation. Like, I've listened to all kinds of podcasts. I read a bunch about stuff. There's camps that, housing is going to drop some. There's going to be more supply eventually, even with all the immigration coming in, because people are going to have to start selling their rental properties or Airbnbs or whatever. It's just getting too expensive, right? And also people think that, interest rates are going to drop here next year and things will become so affordable, and prices are going to go through the roof again. Because I'm just not in that camp, for the fact that that's fine. But if interest rates are 6% or 1%, if you don't have a job, if a lot of people are unemployed, it's going to be harder to buy houses, and there's going to be less demand. So what are your thoughts on housing?
No, absolutely. And so if we do hit a recession, that's when, we look at people who own, maybe a rental or multiple rentals, and those things are cash flowing well because they locked in at a low rate during the course of low rates. And now perhaps they've lost their job, right? And so, or they're a little bit underemployed. They're not working quite as much as they used to be. Their only option to renew will be with the lender that they're currently with, because generally speaking, that lender, if you've made your payments on time and things like that, will just renew you, right? They send you out an offer and you sign it and they renew you. So you can't go to the market and see what's out there. if these interest rates continue to be high and you go from that, let's say you had a rental at 3% and now a rental is all of a sudden close to 7, you're not working, you're not cash flowing that, so you're actually having to put some of your own cash in just to make the mortgage payments on that rental. Maybe you locked into a lease. When that lease comes up, you're bumping that up just to kind of get by. I think a lot of those houses are going to be flooding the market in 2024, 2025. Getting off the rental market, coming into the owner-occupied space. Really interesting too, though, that there's some government policy coming in, and specifically in BC, that could also impact how more access to rentals for regular people in people's owner-occupied homes, as well as maybe impacting the way that Airbnbs are treated. And so some communities might get rid of Airbnbs altogether, and the only way for those particular borrowers to cash flow those was with an Airbnb, not as a rental. So maybe some of those are going to hit the market as potential owner-occupied properties as well, right?
Yeah, I think you're right, Jay. I think it's just, again, we don't have a crystal ball. These are just things we're seeing, and just trying to, the business cycle takes time. It takes time to get into a recession. It takes time to get out of a recession. The biggest worry right now is how long will this recession last when it does actually officially come. I think we're there.
Yeah.
How long is it going to take to get out of it? Even if interest rates drop quite a bit, it doesn't just happen overnight. Where are things going to head? And so a lot of people are, it's hard to really predict where it's going to be, but if you throw reality in there and what's happened to the ground, I believe what you're saying is right. And the BC government is trying to come in with some legislation, and we haven't passed it yet, that you can have suites in pretty much any property in BC. So that could change things. I know a lot of people are putting them in their homes, just as a mortgage helper. I'm not sure what you're seeing out there today. I think like real estate here has slowed quite a bit, and in the big cities like Toronto, Vancouver, prices have come down some. I know it's quite slower, and actually there's getting to be a little bit more supply in those areas. What are you seeing out in Alberta?
Yeah, no, I'm gonna, in half an hour, I'll be doing another video with my buddy Mark Newstater, realtor in Calgary here, and we're still at a seller's market here. We have no supply. Buyers who can qualify right now are having trouble getting into a home. Nothing like last year where there was the $50,000-$70,000 over asking, but typically homes are selling slightly above asking, or at least right on asking. If the price is right. So I don't think we're seeing that quite as much in Alberta just yet, but we have oil and gas artificially propped up by a war in Ukraine and what's going on with OPEC decision making and things like that, and we also have all those people who decided that they didn't want to be paying on that $2 million house in Vancouver anymore, coming out and buying the $1 million house in Calgary, right? So. Yeah, so we're still having net migration. I don't, I anticipate that Calgary is going to be affected a little bit less than maybe some of those other markets, but middle Canada, Saskatchewan, Manitoba, big cities. I absolutely agree with you. I think the housing market is going to be incredibly volatile over the next couple of years, and I anticipate a pullback on pricing as well.
Yeah, we'll see what happens over the next few years, and we'll keep you posted on week to week or every second week. On what our views are, opinions, and again, just no crystal ball. It's fun to chat with you, Jay, and see what's happening out there, and keep everybody up to date. We really look forward to talking to everybody. And if you have any questions about mortgages, you're up for renewal, like Jaden just said, even if you want to stay with your bank, give us a call and just talk about what they're offering, what their products are. We're happy to chat with you, your family, your friends. If you have any questions anytime, please give us a call. I think it'll at least give you a direction financially to get in the right position for what we predict is going to happen anyways. So, so we'll see you next week. It was nice chatting with you, Jay.
And thanks, buddy. Yeah, you too, buddy. Talk to you soon.